Hi, it's Ari Sussman here from Collective Mining. As your viewers probably know, Collective is a Colombia-focused company drilling off what is a very large, high-grade gold, silver, and with some copper tungsten system at Apollo. Apollo is the lead target within the Guayabales project in Caldas, Colombia. And Caldas, Colombia, needs no introduction. It's the best place to operate in Colombia. It's the safest. It's in the coffee region, highest education. So we're fortunate to be developing this project. And we just happen to be next door to the Marmato mine, which is owned by RS Mining, which is in full-blown construction as we speak.
Ari, good to see you, sir. Good to see you. And Happy New Year. We can just about say that, I think. Right, 2024. You finished strong, still going strong on with the as far as share price is concerned. I want to talk today about obviously what's going to happen in 2025 and perhaps how I judge you. But 2024 recap. What were the things that you did or put in place which are going to set you up for success? The latter half.
We kept our aggressive hats on, right, from a geological and drilling perspective. And we just kept trying to push the envelope. We didn't fall into, let's just take what we have and let's go to resource and start study economic studies in advance, because we could see we had in Apollo in particular, the system was still very open and growing. And so we kept pushing the envelope, and in whammo in 2024, we close to the end of the year, we announced the discovery of a new deposit within Apollo called the Ramp Zone, which we'll talk about more in a minute. 2025, we're going to do our biggest drill campaign ever on an annual basis, 60,000 meters. We have $40 million of cash in the bank approximately right now as we speak. So we are fully funded for this year and probably a good part of next year, on top of it.
Right. You're right. I mean, you raised a big chunk of money back in October to kind of set yourself up for this drilling. But I want to talk about that strategy. Right, we saw a lot of companies sort of having doubting themselves with regards to their own strategy and changing things up. I need to move to near-term production to kind of get noticed by the funds, etc. The producers are doing so well. I want to take advantage of it. You said no. Why?
There's a saying in mining, which I know Matthew. Good projects always get funded, right? And obviously, I don't know exactly how big Apollo, as part of our Guayabales project, will become. But, with a lot of confidence, I believe just Apollo alone will grow to north of 10 million ounces. And our goal has always been find more than 10 million ounces of gold, but equally important, demonstrate a project that will produce at a high annual rate. The hope is more than 400,000 ounces per year. That's a big ask. There's only a few mines that produce at that scale globally in gold. Okay, but because we have that chance, it's going to, with bulk ton system, high grade, it's going to garner additional attention that maybe some others wouldn't with lesser systems. It's pretty rare to drill over 10 million ounces of gold that can produce at a high velocity.
Right. So if we look at the type of drilling that you're doing as well, obviously we've been historically focused on the Apollo system. You and I in conversations, you mentioned the trap system. Now as something that you're getting quite excited about. The grades certainly have got the market excited, I think. How do you do you change the emphasis? Do you redirect the drills? Do you reallocate the cash based on what you're starting to see there?
Because of the Ramp Zone discovery within Apollo, it needs to be the focus. I mean, what has happened here, is Apollo, your viewers probably remember, outcrops right at surface. I mean, it starts in high grade. It's got the top 150 meters. It's got tungsten. That's the only place it exists. And it has good copper grades, gold and silver. We eventually lose the copper. Tungsten's gone after 150 meters. Copper dissipates at about 500 meters below surface. It's gone. And we're the gold silver system. Well, what has happened, and this was not something we expected, we drilled our deepest hole to date, which was the announcement in the fall, that helped us raise money. And we discovered a different fluid which deposited high-grade metal. So we discovered a reduced fluid. Okay, so what does that mean? Okay, that means that in the deposit, in the porphyry, a lot less oxygen got into the system. It's meaning copper didn't precipitate. That's probably why we've seen copper gauge dropping. But we see a much cooler and, you know, a less oxygenated mineral assemblage. So we see, and all of a sudden we discovered very high grade gold associated to bismuth and to tellurium. We don't have any bismuth and tellurium in the top 1,000 meters before that. Now, why is that important? Okay, so what does that mean? So, well, first off, very simply, reduced intrusion systems. Everyone's probably familiar with snowline gold in Canada. I mean, I think that's 7 or 8 million ounces at attractive grade in the Yukon. So that's that kind of system. But what people may not know, our next door neighbor, Marmato, you know, RS Mining's Marmato, at the same elevation above sea level, so about 1,000 meters above sea level, they transition from what they call Marmato Upper, which is a vein system, into what they call Marmato Deeps, which is a reduced intrusion related gold system. And they have 6.3 million ounces at 2.5 grams in resources, all categories. Okay. We've just discovered this. We've only have 2 assays for 2 holes. One is 57 meters at 8.11 grams, including 18 meters at 20 grams per ton equivalent. And the other one is 15 meters at 20 grams per ton equivalent. There's 450 meters of distance between those 2 holes. Okay. And they both exhibit this reduced fluid. We're seeing far higher grades than what Marmato Deeps had ever seen in drilling. And the reason for that is twofold, right? Number one, the host rock at Apollo is different than Marmato Deeps. Theirs is hosted in a precursor porphyry phase. It's a good host, but we're hosted in a breccia. And the breccia has more porosity, and more porosity means more space for metal to be trapped within it. That's number one. And the other reason is the ramp zone is still being overprinted by what we call the CBM veins. The same veins we see at surface are still going fully strong at 1.1 kilometers down, and that overprint is juicing the grade. So better host rock plus overprint is so far equaling better grade. I mean, obviously, this is only 2 holes, so let's not jump too far ahead. But, you know, we have 2 more holes pending. They're due next week if the lab delivers a schedule. I've seen the core. It's interesting. We see all the evidence of that same reduced fluid in both. So we're expecting a positive result, obviously with the caveat that gold can be fascinating in assays and you can be surprised up or down depending on what the lab delivers. But this looks really exciting, you know, and with the grade looking far higher than Marmato Deeps, it won't take much to build an additional multi-million ounces at depth here. Last thing I want to add, Matthew, is we call it the ramp zone because it inadvertently starts at the exact elevation where any future mine would drive a tunnel in to access the underground portion here. That was not planned. I mean, we did the site work when we first took over the project of where could you build a mine. We're in rolling hills at the top of the mountains. This is one of our concerns. Where does a mine go? And we hired a company that we used at CNL Gold to help design the mine to say, where would you build? And they said over here. Well, it happens to be that's a location that is 1,000 meters below surface from the top of Apollo on the side of the hill. So we're going to have access to this ramp very early. Normally, I don't think you would or I would care about something that's 1,000 meters down because when are you going to get at it? But because this could come out right away, it's very relevant.
So get into detail because you know some people perhaps don't understand that. As we're saying is you're 1,000 meters below surface, but you're coming in from the side of the hill with the ramp, and therefore all of the contained metal, this high grade metal you're finding, you know, silver, gold here, that's sitting above you. Above the ramp, I should say. Is that what we're saying?
That is correct. Now, we do think we're going to start
with
a
what does that
open
mean?
pit. Okay,
What's
so
that
means a huge advantage. So think about this advantage, okay? So irrespective of the huge advantage that we have, we're right by the Pan American Highway, 100%. We have power lines traversing the property. It's all run of river hydro. So those are amazing things. We have work. We're in a mining camp with Marmato. There's workers, but let's ignore that. What does this mean? Okay, so coming in from below means that at least 1,000 meters of the deposit is going to be in a gravity-assisted scenario in mining. So now let's break that down. What does that actually mean? So that means really 2 things that matter. Number one is you will create ore pass shapes where you literally, after you mine a stope, You drop the rock down the chute, it falls to the bottom to a truck or a conveyor, and it goes out to the plant. So think about the savings there versus the cost in mining of expensive large trucks with diesel having to go up a ramp. That's number one. Number two, a thing that most people never consider in mining is water. Right. I'm sure we're going to have water. Virtually every underground mine has water. It's expensive to pump it up. When it flows with gravity, it's a non-brainer. You just make a channel and it will flow out undisturbed to its source, which in this case will be the Calca River, which will be very close by. And so that's going to be a very low-cost element to any future mine here. Excellent news.
Okay, so it's less capital equipment, less energy costs, another biggie. And you don't have to deal with the water. You deal with the water efficiently, I guess. Okay, so which I guess that answers the question around, with sort of these sort of traditionally deeper mines where you're having to ramp your way down. There's a lot of wasted, not just energy and cost, etc., but it's also that kind of waste rock that you're having to get after. It dilutes your grade effectively because can you explain that?
Okay, so yes, I mean, look at my last company, Continental Gold, which we sold for about $2 billion to Zijin. That was a very high grade narrow vein system, multiple veins, but narrow veins, right? And there were some bulk areas, but the waste rock is when you're mining narrow zones, right? When you blast, right, you're going to inadvertently or accidentally blast rock that's not part of a structure, and so you're going to have dilution from that as well, always inside deposits, right? And so inside the vein there's going to be some dead sections. That's called internal dilution. Okay, so you add those two, and then you look at what's your ratio of ore to waste, and that's how you know how much money you're going to make. And in our case, we have a system that's bulk. Okay, so this is it's a brecciated porphyry was the host rock. Okay, so what does that mean to people that have never heard of a brecciated porphyry? So think of a giant jigsaw puzzle that the company that built the puzzle was very poor at cutting the pieces out. Okay, so when you sit down with your family to put this 1,000 piece puzzle together, you slap the pieces and they don't quite fit. So there's this lots of space between the pieces. And what happens is as controlled fluids like veins come into the breccia, instead of remaining narrow veins, the metal dumps out of them and fills up these spaces. So this is how you get a bulk system, because it's wide and the spaces are inadvertently everywhere throughout the system. And that is what we have here. So you're going to bulk mine, okay? Obviously, we haven't done a pre-fees or fees or even a PEA at this point, but internally, we are looking, at least at the top part, of mining the system by a bulk method known as sub-level open stoping. Okay, for those, it's a very common method. For those that haven't heard of it, if you're interested, take a look at El Dorado Gold right now. They're building the scurriest mine in Greece. This is in construction, and the underground's going to be sub-level open stoping. We actually use it as a good analogy in terms of what costs might look like cutoff grade and these kinds of things. It's available in their technical report. So we're not going to have a problem with dilution, is what you're asking, because it's a bulk system, right? So when you're taking a bulk, of course you're going to have some dilution on either side, but relative to the size of a stope you're going to mine, it's going to be so minuscule, it won't make much difference on economics and future profitability.
I think this is kind of useful sort of exercise of the so what explanation for a lot of viewers, probably even some of your shareholders, quite frankly. Let's carry on that vein then. Your reporting of hulls, we're talking big intercepts. I think, some companies in the past have maybe been guilty of smearing their results, not being clear about this. You've gone to some extraordinary lengths to just lay that out. I refer specifically to some assay results coming out of the ramp zone. Why did you feel the need to do that?
Because, we've come out of I believe we've come out of a 12-year bear market. It only entered a bull market sometime in the summer of 2024. Okay, and I think we all know from bear markets is doubts grow in bad times and less care in good times. So we were at peak doubting, right, in the summer of 2024, which was the bottom. And so you report, you look at our ramp zone holes, 15 meters at 20 grams, 18 meters at 20, within 57 meters at 8.11 grams. And I know that there's going to be many people that would say, you probably smeared. I bet you within there's 1 meter at 800 grams or something like that. And so the grade of the rest of that interval is very low. And how do you mine like that? So we took the 18 meters at 20 grams and we published assay by assay over that 18 meters. So you could see what the individual grades were of each of those samples to understand that we didn't smear anything. Secondly, what's important is you always hear about cutoff grades and top cuts, right? Well, and I've seen companies, Matthew, say, hi, we drilled X meters at high grade, but at a 10-gram cutoff or 10-gram top cut, this is what the grade is. Why did they pick that? Because a top cut is not an arbitrary number. A top cut is actually based in statistics, right? So when you have a lot of assays, from drilling, you plot them on a grid, and you draw your population center in a circle, and what lies outside your population center you bring within. That's how you decide what level you're cutting, right? The top cut. Well, in our case, you can see the samples. Nothing's obscure. There's no 200, 300, 400 gram. So I would bet that statistically, we need a lot more drilling, but if it continues like this, there'd be very little samples that would fall outside that medium because of the consistency of the grade. And that's what makes an excellent ore body, right? Variability is a killer.
Variability, well, exactly where I was going, which is, do you think that you're 2 holes in on the ramp side, but and more to come, another 2 to come, but are you starting to get a handle on how this ore body, because you're talking about a very big land package and you're talking about, deep drilling here. Are you getting a sense of how it's constructed? Are you getting more certainty and a feel for it? And therefore, because the cost of this drilling per hole is not cheap, you, in terms of targeting and coming up with that drill program, you feel more confident?
Yeah. So look, without question, some PhD student in the near future is going to write a thesis on the system. Okay. It is unusual, right? From the morphology of the breccia. So normally, you have 2 types of breccias: pipes, which are small. This is not that. Or the larger ones in porphyries usually are vortexes that start wide and close at the bottom. I don't know why ours starts narrower and gets wider. Okay, it's getting wider as we go deeper. So that's number one. Number two, this transition of fluids, less oxidation, more reduced. What is this? Why is this happening? So we've got a great understanding of the geometry of the system now. There's no question we got the geometry nailed, right? What we're working on is the internals in it, in the upper part, and this expansion at depth. I don't know how big ramp will get, but let me say this to you. Marmato Deeps is 6.3 million ounces at about 2.5 grams per ton gold. Its dimensions are only 300 meters of strike by only 100 meters across by 700 meters vertical, and it's wide open at depth. It's going to grow. They just couldn't drill that deep, right? They're in construction now. So if we have a similar morphology to that, I don't know, right, at a much higher grade profile, which the early indication is yes, you now can get an understanding of how big the ramp zone could evolve into. We have a lot of drilling to do. 2 holes are due soon. Let's wait and see what we get. But you understand the excitement here, and look, stepping back a minute, I think this is the important thing. Who's the last gold company to find a camp, right? We don't even use that word anymore, right? I strongly predict that we have found a camp, and I include Marmato. It's part of the same geology, okay? So they are, in total resources, almost 9 million ounces of gold, plus whatever millions have been mined historically, we don't know, right? We've got a big, giant, multi-million ounce system at Apollo. What's in between? I think we're going to be seeing north of 30 million ounces here in the future. I won't be around for it. I do that. My goal isn't to drill it off, but that is what's going to happen. And I think you're going to see a series of mines in this area that's something like 5 by 5 kilometers. And so pretty exciting stuff.
It is pretty exciting stuff, but also, but you hit the nail on the head there. It's, where do you take this thing through? So you said, I don't want to be there to, take this thing into production, right?
You right? As a company need to be prepared to build. I learned this at Continental.
Yeah.
We went and built the mine, right? Was our goal to build the mine? No. The market was tough. We were in the down part of the cycle. And the financing was much cheaper than it is today. So we financed and built the mine, and then it happened to sell while we were in ramp up to production. We had already produced our own gold, and then we sold in 2020. So if I had my way, I think today, exactly today, based on the metrics, every junior should be a seller. Okay, and that's because costs are high. Inflation's high, input costs are higher, right? So we've seen time after time after time CapEx blowouts on it. I think about everything. I can't think of much other than maybe G Mining was the only one that came in Brazil, kind of on budget, on schedule, and they're builders that own their own mine. So you look at that scenario and you say, do you want to build? No, but we're going to put the team together to build this. There's no question we're going to do that, because I also, and all of us, don't have a clue what the world situation is going to be like in 2 years. Maybe rates will be back down to zero again, and maybe financing will be cheap, and steel prices will be down, oil will be down. Who knows, right? Maybe Trump will pump all kinds of oil out of the U.S. and lower the prices. I don't know. But you will be prepared to build, but hope to sell.
Absolutely, but I think it's always been thus, in the sense that it helps your negotiating power when you are talking. People say you've obviously got Aris there with Marmota Mine, literally, as you say, so in the same camp. But back to that question of how far do you take this, and how much work do you do? How much do you spend to signal what? Because we saw a lot of M&A last year. You're right, we saw a lot of people get things horribly wrong when it came to the kind of economics of things, and technically, and it really didn't help the sector. But you saw some really good M&A as well, but mergers of equals, but there's no new ounces coming in. It just seemed to be, big companies getting together, big companies get even bigger companies. The new ounces is got to be a driver. We've got a lot of North American, Canadian gold companies, 5 million ounces, just paralyzed, sitting there around 100, 150 million market cap. No one cares. What's different about you?
So remember that all ounces are not created equal, right? Quality ounces get valued, lower quality ones do not. You are absolutely correct, though, on what's happened in the M&A. And this is classic of a cyclical business, right? The producers always merge with producers. Now we've just seen, I think it was yesterday, Newmont complete the asset sale from the Newcrest acquisition. They basically blew out all the old gold assets. Was the last one traded, I think yesterday. Discovery Silver bought Porcupine, right? So that's now done, okay? I think we're going to see, I think this year is going to be a record amount of M&A in the space, assuming the commodity prices stay flat. Okay, that's the caveat. If they drop, there won't be M&A. I do not think we're done with the producers merging with producers story. I think that's still got at least a few more months to play out, maybe more. But the reason they're all doing that is because they have no growth. Okay, they have no growth. Okay, and right now they're not buying new discoveries because they're scared of the CapEx, right? So it's cheaper to merge with other producers. However, that's going to change. It always does. And it's going to change in a world where, at least in my career, which started in the early 1990s in the space, I've never seen the cupboards this bare with new discoveries. It is thick. So there's going to be a dash at M&A. I'm sure we'll be one of them. There's maybe 4 or 5 others, at least in gold. And that's kind of it. Ignoring the Australian market, because I don't know anyone and I don't pay attention to what's happening down there. But in the North American listed and the London listed, there's very few. Now, what I can say, again, we're not in play today. We need to drill another 90,000 meters. We're going to do 60 of it this year. We'll finish off, the other 30 next year, and then we'll start to think about studies. But at that time, we will be able, at least if someone's interested, to deliver a project that will be big. Right? It may not be in a 43-101 resource, but remember, acquirers don't care about your independent study, both on mine planning and resource. They because they do that better than any independent engineer could ever do, right? They care that you've done the background steps, the legwork. Do you have baseline environmental, baseline social work, security, health, all these things? Most importantly, do you own the land that you need to build infrastructure? And these are all the things that we've been doing and we're continuing to do, and we will be able to deliver a complete package to a potential buyer. Now, again, I mentioned this before and I will say it again. The inflation is a problem and it scares people to buy. But when you rank our project against many others, it's got to be at the top of the list. And I'm not talking about the quality of the project. I'm talking about the location. We have hydropower cheap right at site. You drive on the Pan American Highway to the project with road access throughout, and we have labor. Okay, we are based in a town of 35,000 people that only real existence is mining and coffee farming. Okay, so you're going to be able to build a mine here without having a camp. Right? Don't underestimate how much that saves. People have their families, they go home at night, they eat dinner and breakfast with their kids, and then they get bused or drive to work and we pay for lunch. That's far better than housing them, in the middle of nowhere and have fly in, fly out and all these crazy things. So we're in such a great position. And, last thing I'll say, my thought, Colombia, I mean, this is really a new jurisdiction for gold, right? I mean, Zijin is now a big miner. RS Mining is mining, but there's no Western large-scale gold producer yet. There's big base metal players in Colombia. I mean, Glencore operates the largest open-pit coal mine on the planet. In Colombia, South 32 operates the third largest nickel mine. But in the gold space, it's not. But if you are a big gold company saying, I want to go into a new jurisdiction, right? What box needs to be checked? And that has to be, am I going to be there producing on the cornerstone asset for decades? And if so, then I want to go in, and then is the prospectivity of that country robust that I believe that over the next 20, 30 years, I'll be able to find more. And I think we'll be able to deliver that. And Colombia, without question, delivers one of the best prospectivity countries on the planet. So I think it's a really attractive proposition. Matthew, last thing I'll say, I know I'm rambling. We probably need to end soon, but I will say this. If the West wants minerals to come out of the ground, and control them, which at least with Trump now seems to be the case. Okay, he's very vocal about this. The place that we're going to find these minerals and bring them out of the ground is in the northern part of South America. Why do I say that? Ecuador, Colombia, Guyana, Suriname, and northern Brazil. I like Chile, I like Peru, I like the South. It's mature. The southern countries have been explored. Okay, the chances of big discoveries aren't as good. These countries in the north have not been prospected. You're going to see giant discoveries coming out of these countries. We've already seen it. G Mining buying Reunion Gold, right? Brazil in the north, there's some big things happening. Solaris in Ecuador, is probably in play over the next year to a Chinese buyer, I would assume. And we're going to see a lot more of this. And you can permit in all these countries fast. That is everything right now on political risk spectrum, right? I hear this political risk, but the number one political risk in my mind is how long does it take to permit a mine, and are you protected? Colombia, by law, 10 months. That is the permitting timeline in Colombia according to law.
You make some interesting points there, and I do want to come back on something. So, but on the jurisdictional component, I agree. We had Proteus Mining CEO on this morning, Jeff. He said actually Western Australia has become difficult. A company there named, it's taken 10 years to go through permitting, and then it got rejected. So there's no easy place at the moment, and maybe some of these new kind of what used to be called frontier countries are coming through need to be paid attention to. But something you said, I just want clarity before you go, and I know you're busy and you got to head off, but it's this. I think you framed it as saying, look, there will be mergers of producers, but there's no new answers. They don't want to take the risk, the kind of the capital expenditure budgeting risk associated with trying to cost these things out. Certainly, what we've seen in the last 5 years, people have kind of blown their brains out there. But you are saying there's no point in you maybe moving through to that economic study phase because the majors are going to do a better job than you. But do you expect that you will do that? Would that be a good thing for the market to see if even if the majors will maybe ignore your economic studies?
So you need to look at the cost of capital as an explorer and where you can maximize value. Okay, so let's look at three scenarios. Okay, we are familiar with Great Bear, which Kinross bought for around $3 billion Canadian. Okay, they didn't have a resource, they didn't have a study. The share price ran from, I forget where it started, but correct me if I'm wrong, I think the takeout was at $27 or something like that Canadian per share, give or take. Okay, so it had, everybody made a lot of money, you know, that owned that at any time along the cycle. We then just recently had Philo, right, being bought out by BHP and Lundin for $4 billion, I believe, Canadian. If I'm wrong, I apologize, but something around that. Okay, no resource, no study. It got taken out at an all-time high share price. Then the third child in the large-scale M&A is Osisko Mining. Okay, it got taken out by Gold Fields for a very big valuation at $4 billion, maybe it's a little bit more. Okay, but if you look at the equity performance of Osisko Mining, unless you bought it in the final 6 months, you didn't make a cent over a decade. Okay, because it was serial dilution. So the share count grew, the market cap grew, but the share price didn't appreciate. Okay, you don't want to fall into that trap of over studying and over drilling. So that's why you want to hit that inflection point to sell. If we have to go down that road, we will, but that is not the ideal choice for any company to do. The market doesn't value studies anymore anyways. In fact, I think they've become almost negatives, right? If we look at PEAs, I think juniors are in, you're damned if you do, you're damned if you don't scenario, because if your PEA is actually honest, which I don't think we've seen it very many times, then the market automatically says, that company's screwed. Look how much money they need relative to their cap. Where are they going to get it? So then instead they come out with these phony studies that are way lower on CapEx and OpEx than reality. And then everyone says that study's phony. I don't trust it. Right? So there's really not a comfortable ground. I'm not worrying about that right now. I'm just worried about building a large internal model on the system. We will eventually do a resource if we don't sell, of course. But that's not my immediate goal. It's to get ourselves to a north of 10 million ounce place, and then let's see where the chips may fall. But we will be ready to go down this road and build. Okay, one last thing I will add before I go. On a bulk system, the big advantage versus veins is it needs a lot less drilling to bring its resource up into confidence categories. We don't need 1 million meters or anything crazy like that, so we won't have to spend obscene amounts of money. But, I think in total, 200,000 meters gets us to a pretty good finish line.
Harry, appreciate the update. See you soon.
Good talking. Take care.